Hi guys, welcome to my YouTube channel. Here I am back with another informative video. So the topic of discussion is how do six-figure earners such as freelancers and independent contractors, creators can save on their taxes, and what tax strategies they can use to save their income. So, what are the seven smartest tax strategies for freelancers and independent contractors? So, summary of what this article covers: deduct business expenses and consider an S-corp to reduce taxes. Use home office vehicle and SEP-IRA deductions strategically. Make quarterly tax payments and separate business finances. Work with a CPA to optimize savings and stay compliant. You didn't go independent to spend your time a second guessing every financial decision or writing checks to the IRS that make you cringe. So you became a freelancer, consultant, or a creative entrepreneur because you had something better to build, something that called the shots and earned a reward. But here's the part no one warned about you about: when you earn 1099 income, you are not just your own boss, you are also your own bookkeeper, payroll department, and tax compliance officer. And if you don't have a strategy, the tax code will take full advantage of your success. Here's a good news: the tax code also provides powerful legal opportunities to lower what you owe and increase what you keep. So you just have to know how to use them. At Insona CPA, our team experts, CPAs, enrolled agents, and small business accountants work with the independent professionals across the US, especially in our home base of the Austin, Texas, to help them pay less and save more and plan smarter. Let's dive into seven smartest tax strategies for freelancers and independent contractors, the kind that builds wealth, not just compliance. First is master the art of business expense deductions. Let's be honest, if you are deducting every legally allowed business expense, you are paying more in taxes than you have to. No judgment, just facts. Every business expense you don't track and report in money is money you are gifting to the IRS. And unless you are into charitable giving of that kind, it's time to change the game. Deductible expenses every freelancer should track. The first is home office expenses, whether it's a corner office or converted guest room. If the space is used exclusively and regularly for the business, you can deduct a proportional share of your rent, utilities, insurance, and even maintenance cost. The simplified method lets you deduct $5 per square foot, maximum 300 square foot. But a customized calculation based on actual cost may give even more. Then the point of business mileage. For 2025, the IRS allows a 70-cent deduction per a business mile. You need a log, either manual or through an app like MileLQ and the QuickBooks. Self-employed to claim it. Then technology and software: laptops, microphones, cameras, phones, domain registration, email platforms, cloud storage. These are not nice to have, they are deductible operational tools. Then the point of professional services comes: bookkeepers, graphic designers, web developers, copywriters, and yes, your Austin tax accountant all count as deductible business services. Then marketing and advertising, the including website designs, SEO strategy, paid advertising, Google Ads, Instagram, and Facebook, and even brand consultings. Your deduction lower your adjusted gross income, which is figure used to determine how much federal tax you owe and whether you qualify for a certain tax credits. And the deductions as qualified tax accountant near you, and as a certified public accountant in Austin, and can ensure you are not leaving deductions on the table. The second point is consider electing S corp status to reduce self-employment taxes. If you are earning over $60,000 in net income from freelancers or 1099 work, it's time to stop treating your sole proprietorship like it's your forever home. Because while an LLC offers liability protection, it does not reduce your self employment tax burden but electing to be taxed as an S corporation does. Here's why it works. As a sole proprietor, you pay 15.3% self employment tax on 100% of your net income. That's the both employer and the employee share a social security and Medicare. As an S corp, you pay yourself a reasonable salary subject to payroll taxes and take the rest as distributions which are not subject to self-employment tax. So if you earn $100,000, pay yourself a 50,000 salary and take the remaining 50,000 as distributions. You avoid self-employment tax on half of your income. Then the bonus QBI deduction, qualified business income deductions. As corp owners may also qualify for the qualified business income deductions, QBI deductions, which allows you to deduct up to 20% of your qualified income. A massive win when the structured correctly, but maybe but we want you must run payroll, file a corporate tax return, and maintain proper corporate compliance. And that's where a certified CPA near you or an experienced Austin tax advisor become essential. The third is fully utilized home or vehicle deduction. You don't need a high rise office suite, yeah, or a corporate car lease to make home and vehicle expense work in your favor. You just need the right documentation and a clear understanding of how deductions work. Home office deduction, if you are using part of your home exclusively for the business, even if it's a dedicated desk in your bedroom, you are likely eligible. You use either the simplified method, flat $5 per square foot, maximum 300 square foot, or the actual expense method, which may yield a larger reduction if your housing costs are high. Then vehicle deductions. If you are regularly driving to meet clients, attend events, or pick up supplies, you are entitled to deduct standard mileage at the IRS rate or the actual vehicle expense, including fuel, insurance, repairs, lease payments, or the depreciation. The fourth point is open a SEP-IRA to save for the retirement and cut taxes. If you are not saving for retirement, you are just missing out on the compound interest. You are missing a tax deduction gold mine. The simplified employee pension SEP-IRA is the ideal for the freelancers and the independent contractor because it has high contribution limits and low maintenance. SEP-IRA benefits: contribute up to 25% of your net self-employed income, capped at $69,000 for 2024. Contributions are the tax deductible, lowering your taxable income. No annual funding retirements requirements. Contribute what you want when you want. Work alongside other retirement plans if needed. If you need help figuring out how much you can contribute based on your net income after self-employment tax adjustments, contact an Austin CPA firm who knows how to model retirement contributions within your overall tax plan. Then make quarterly estimated payments or pay penalties later. The IRS is a pay as you go operation. If you are not paying as you earn, you are behind, and that's mean the penalties and the interest even if you pay in full by April. 2025 quarterly payment deadlines is 15th April, 15th June, 15th September, then 15th January 2026. Freelancers and the contractors should set aside 25 to 30% of each client payment into our dedicated tax saving account. Then make quarterly payments to avoid underpayment penalties. To calculate what you owe each quarter, you can use IRS form 1040 ES, use a 1099 tax calculator, or better yet, your home Austin accountant. The sixth point is keep business and personal finances separate. Best practices is to open a business checking account, get a dedicated business credit account. The seventh point is work with a CPA who specializes in freelance taxes. So then you can save on your taxes as much as you want. So that was all about the topic where we discussed all these 7 methods to save on your taxes in 2025 as a freelancer or as a creator. So hope this video will have been beneficial for you. So do subscribe the channel for more videos.